Hi, it's Dave. In this video, I'm going to share a chat I had with my good friend Emmet Peppers. I've known Emmet for many years, and over the years, we've talked about Tesla and Bitcoin and investing in a multitude of different topics. In the past year, though, Emmet has seen his personal portfolio grow from roughly about $1 million to over $30 million. And in this conversation, I dive into Emmet's investing approach. And more specifically, we look at the exact trades that Emmet did to grow his portfolio in such a radical way. All right, here we have Emmet Peppers on my show, and I want to welcome you.
Hey, Dave.
Hey, how's it going, man?
Good.
Good. Yeah, I've been wanting to do this interview for quite a long time. I guess it's been a while, several months since you told me about some of the trades you've made this past year, and I wanted to find out more information. But I also wanted just to learn, and also share with my viewers kind of what's going on. I noticed that you're saying that you finally quit your job. And now
That's
you're
right.
able to kind of share more openly. And I want my viewers to know that you didn't ask to come on my show. I asked you, early on, several months ago, and I was patiently waiting. So I'm excited about this whole episode. Actually, before we go into kind of the trades that you've done this year that maybe some people aren't going to believe per se, I kind of want to go back into, like, let's say 7 or 8 years ago. And I want to, so for people who don't know, Emmet and I, we go way back. We met through the forum called Tesla Motors Club. It's a kind of a Tesla enthusiast club. And in that club, they have an investor section where a lot of kind of early Tesla shareholders got involved in discussing the stock back, in 2012, 2013, et cetera. And Emmet was an early kind of user in that forum. You went by the handle Tesla Opt, right? TSLA Opt. And that was because like you were using options, right? At that time for some of your trades, right?
That's right.
Yeah. So I'm curious.
Yeah,
Go ahead.
I was using option. I was working for Interactive Brokers, which I worked at up until my last day was just October 30th, a couple days ago, and I had learned how to use options from that job to some degree. You can do some pretty fancy trades with options, of course. But I thought options were a good tool to get exceptional leverage on opportunities such as Tesla.
Got it. And so that was back in what, 2012 or 2013 or so?
I think so, yeah. I mean, I discovered Tesla in either late 2011 or 2012. There was a prototype Model S at a fancy shopping mall near me in Greenwich, Connecticut at the time. And me and a friend of mine from Interactive Brokers, actually, who was in IT, we went to go visit it together. And it was just love at first sight, seeing that car and that user interface and that screen. And I got a test ride in a Roadster then, and that just felt exhilarating. But I was really in love with the Model S interface, to be honest.
Oh, really? Huh? Did you get a chance to test drive a Model S early on?
Not at that time. Not until after studying it more closely with my friend. We both studied it closely. We discovered the Tesla Motor Club's forum together, where I met you, and it was a nice camaraderie, that forum especially. But I had learned that if you put a deposit down, then you would sort of get the right to a test drive at an event near you. So I was eager to put a deposit down early and get that test drive. I think when did the test drives come in? Was that 2012?
Yeah,
right?
I think late toward the end of 2012 or so.
Yeah, that's when I got my test drive, and by that time I'd already been buying options and leaps, long-term options in Tesla in my IRA account and such. And
Got it.
But when I got the test drive, I think, as you might have experienced, you realize this is the real deal. Like, this is a serious step change in technology. And that was conviction, that experience to really go more full throttle into investing in Tesla.
Yeah. I thought back then it was like a special time because like options were long dated options, leaps were pretty cheap, for Tesla. They just, the market, the shorts had just suppressed, the stock price so much. It was some really appealing deals out there. I mean, back then I personally I wasn't that exposed to options. And so I was just kind of all stock. And I was reading more about options like on Tesla Motors Club, et cetera. And it wasn't until like May 8 when Tesla had their Q1 profit in 2013, and it just spiked from like it was in the 50s, and it just went up to 70, and then it continued to go up, the next weeks into 70, 80, and it broke 100 up to almost 190. And it wasn't until May 8th where I'm like, oh man, I think this is gonna continue to go up. It was like one of those feelings like, oh my gosh, this stock has been so suppressed for so long that
Yeah.
it's like it's not worth $70. It's worth a lot more. Um,
Yeah.
and that's when like I got into options. Just like actually right after the earnings call, like when Tesla was around 70, and yeah, I didn't know too much. I just like was like I told my wife because I was like busy like getting my account set up for options like on that morning the day after. I'm like, I don't care what you buy, just buy something, anything, and just liquidate our down payment that we had been saving for a house. Just stick it into options, and doesn't matter the expiration date, doesn't matter the strike date, right? Just buy it. And she was like, yeah, she was panicking at first, but after a while she got used to it.
Yeah.
But yeah, those were some interesting times though. Were you surprised at kind of the violent move up? I mean, we're talking about 2013. For people who don't know, the stock was stuck between $30 and $40 for like the longest time, and at least going into 2013. And then
Yeah.
Tesla reported their first Q1 GAAP profit in 2013, May 8, and the stock just skyrocketed. Right?
Skyrocketed.
Yeah, it went from 50 up to
Yeah.
100, 150, etc.
Yeah, it was in the 20s it would bounce between the 20s and 30s. Like when it finally broke 40, you just knew something was up, right? And
Yeah.
I remember buying options, and I think the first round of options I bought, I must have discovered in 2011 because the first round of leaps I bought expired worthless. They were like 40 strike options,
Hmm.
and I just reinvested more of my IRA at the time into more options for 40 strike or 35 strike calls or whatever. And the strikes only went up to like 40 at the time, I think, maybe 45, or I don't even think
Hmm.
50. So when the stock busted to like 50 or 60, I realized, wow, I think it's going to take off soon. So I sold all my like in the money 40 calls, which are already like a 10xer, and I
Yeah.
used that to buy like 75 strike calls that were shorter dated.
Hmm.
Um, and that went up like 50 fold, in the next few months. And so I made a lot of money when it got up to 150-ish, and I had to pay some enormous taxes that year. But
Yeah.
it was a big win for my IRA that went from a few $1,000 to like 500 or between 500 and a million in a year. It was amazing.
Hmm. Yeah. Yeah. I
And
mean,
my personal account as well, but my IRA,
mhm.
it was tax free, so it was nice to kind of use that as a measurement.
Yeah. I mean, there was just a lot of, stories and people back in the day on the forums who, yeah, we just had the sense of how suppressed the stock was, and to see it skyrocket and people in options, it was pretty an amazing time, I'd say. Yeah, I noticed like, yeah, after that time, Tesla was just kind of got stuck in a rut. It was like what, 2013 to last year, right? 2019. Basically, we got
Yeah.
Tesla in a range, and it's just pre-stock price, what, between 200 and 400 or so for the longest time. And it seemed like at times it seemed like the stock was just suppressed and it was going to skyrocket, right? If they could just get Model 3 down, and become
Yeah.
profitable. But other times it seemed kind of rocky with, different tweets going out and different stuff. So
Yeah.
how did you,
Yeah.
handle, 5 years of this range bound just volatility going up and down?
Yeah, that's a great question. And so when I think of stock price, I think of market cap mostly, and I saw it in the, I don't know, like 30 to 50 billion market cap range. It used to be at a 2 to 4 billion market cap when we first discovered it, somewhere in that range. And I was like, this is going to go much higher, I think. And then it was like this 30 to 50 billion market cap, which was, I think, like the 2 to $400 stock or something like that. But I always thought it was like a multi-$100 billion market cap company waiting,
Mm-hmm.
and I always wanted to be the first adopter and be one of the first ones to get the Model S, first one to get the Model X, first one to get the Model 3. It was one of the earliest to get all the products, because I think, as you and I had talked over the years, it's really all about the product, right? Like if you
Mm-hmm.
have a superior product, as long as you can build it in some profitable way, you're going to win out. And it was, I think, what separates me from others who gave up along the way is there's a lot of misinformation about Tesla, a lot of disinformation about Tesla from, about competitors coming, and people easily got scared off and were like, all right, I'm going to take my profits and run, or they just wouldn't invest. They'd think, oh, Mercedes or whoever's coming out, Audi, e-tron's going to beat them. And they would just believe the articles. But I think you and I, especially, we'd dive into things and we'd want to read about experiences of people who test drove those other cars, and you'd have to also realize when you're reading the experience, is it an auto magazine that's being paid through advertising from Audi, or is it like an actual genuine user that's, giving an honest feedback opinion? So you have to kind of read between the lines a lot of times and to get a real impression, because we didn't have the opportunity to test drive a lot of these potential competitor cars. And as long as there was no formidable competition, my conviction stayed pretty strong that eventually, Tesla would be able to build enough. They'd be able to build as many cars as they could, and they would sell every single one they could, and in the long run would win. And so, it was a long 4, 5, 6 year bouncing around of the stock price, like you said, and it was painful at times. But I think the camaraderie of the forums, you and I had other friends that were gung-ho Tesla investors, and we would talk with each other, try to look for faults in our own reasoning. We'd search hard. I'd listen to bear, arguments, all those famous, Tesla bears. I'd listen to their podcasts and try to find truth. And as painful as it was, I'd try to find like, what's their logic? What's their reason? It would all boil down to like the competition is coming. That's the only real argument they'd have that, in my opinion, could be legible. And that argument just didn't stand based on everything we've read and seen.
Yeah, I remember you sent me texted me some some podcasts, I guess, by one of the Tesla shorts, and I was like, okay, I'll listen to it. It's an episode, but after like 15 or 20 minutes, it's just like, oh my gosh, what am I doing with my time? It's just like so hard to, ingest some of that stuff. It's just like, yeah, it's beyond, yeah. I'm curious though, regarding like kind of your early product adoption principles. Like, I remember you got a Model S early on. Like, when did you buy that Model S?
Yeah, it's a fascinating story. I got it in March in 2013. I was one of the first a few hundred deliveries in the Northeast. I was living in Connecticut at the time. There wasn't even a service center in Connecticut, or the closest service center was Queens, and I lived in Stamford, Connecticut, which, 50 miles away or something like that. And I got the delivery and I was like, wow, this is amazing. I love this car. I looked forward to driving it any chance I could. And like 2 or 3 weeks into owning it, it just wouldn't start up suddenly. And I was like, what happened? Like, what happened to my car? I know I'm an early adopter, so I expected like bugs and stuff, right? So I called the Tesla service center, and they give me kind of the runaround, like, yeah, we'll have someone call you. They had some like Ranger service that called me and like, yeah, we're going to come look at your car. And he came to look at my car, and he said, yeah, there's a part missing. I'm ordering the part. They gave me a rental car. It was like an enterprise rental car, or like a Honda. It's nothing compared to a Tesla, right? But a week or 2 weeks go by. I'm calling, trying to get updates. I'm not really getting an update of when this part's coming in that I'm missing. So I'm getting worried, and I'm thinking, man, what do people do like at my company, the company I was working at? What do people do there when they have customer service issues? They can't get through. They email the founder, right? They guess his email. And so I was like, all right, I'm going to email Elon Musk. Yeah. So I guessed Elon's email, right? And this is 2013, before he was uber famous like he is now. He was well known, but he wasn't like he is today, right? He had maybe 1 million Twitter followers, not 30. I don't know what it was. But anyway, I guessed his email address, sent an email, polite, like, hey, I'm having this trouble, blah, blah, blah. And literally like 15 minutes later, or maybe 30 minutes later, I get a call from the head of the Queens service center. And the guy calls me. He's like, yeah, I'm sorry to hear about your issues. We're going to send a tow truck up tonight to pick up your car and bring it back to the service center here. And we'll switch it out with a part in our car in our lot and get it back to you within a couple of days working. And I was like, oh, that worked. Awesome. And then like an hour later, I get an email from Elon Musk. like
Mm-hmm.
lo and behold, like the founder emails me, and it was just like an amazing experience. And we went back and forth on email for a little while about ideas and stuff. It was really cool. It was really an interesting
Mm-hmm.
experience. I saved the email, share it with my grandkids one day when he's like the king of Mars or something.
Yeah, exactly. Or soon to be probably the richest, person on earth. Yeah.
Yeah.
Um,
But that was like a moment where I was like, wow, this company is different. Like Elon
mhm.
runs the show for real there. And like that was also helped build my conviction. Like if this guy is that hands-on and like can make things happen, that's a good sign too.
Yeah.
He cares.
What was your Model S? Was it a performance or
No,
no?
it was an S60.
Oh,
It was
okay.
just yeah, it was I almost went for the 40. They had the 40
Yeah.
kilowatt
Yeah.
range then. It was like software limited or something. But I could barely afford the 60 kilowatt range. Like, at this time, I could barely afford the car. It was really just
Yeah.
to help build my conviction in the stock. And I loved early technology. My wife, like, I had to, it was really
Yeah.
tense to get that car, but I was able to secure her confidence to get
Did
the
you
car.
did you take out a loan or did you just pay cash?
I think we took out a loan for that first car. Yeah, we did
Okay.
have a loan, and we were paying it off. Yeah.
Yeah. I remember I had a hard time like, I knew I had to be close to the product. So I was like on Tesla Motors Club, like DMing all these product owners personally, asking their experience back in 2012, the first owners. And then
Yeah.
like, I remember I'm like, oh man, I can't buy a Model S right now because the stock price is just too low. It's just like, I need to put my money, in the stock. And so
Yeah.
I would go to these Model S meetups nearby, they're Model S owners, right? And I would go to them and bring my wife, and then the people would be like, why are you here? You don't even have Model S, I'm like, yeah, just kind of, I have some stock, but I don't have a Model S. But it was just like this thing was, I knew I had to be close to the product, but it was just like, I knew it was an opportunity cost, anything I put into the car would be less stock. And so I held off until probably early 2014. And that's when I finally got, Model S. And I just, yeah, it was interesting. And then I think later on you changed your Model S. Did you get a P85D or something?
Yeah. So when I moved to California a few weeks before I moved, that was 2000, summer of 2015, I think. Yeah. Um, I sold that or traded it in, and I still owed a bunch from the loan. But I traded that in for a used P85D that had the autopilot the first generation autopilot too. And my sister and I drove it across country using the supercharger network,
Mm-hmm.
which was a lot of fun when I moved to California from Connecticut, and
Yeah.
met my wife and kids. They flew, and we met
Yeah.
them there. But it was a week-long, amazing trip using the superchargers. Yeah.
Yeah, yeah. And then that was 2015. I remember we went to a Tesla event. It was the Gigafactory, I think, opening event. I think
Yeah.
you drove, right, your P85 there,
Yeah.
and then
Yeah.
you drove it back. You had to use some superchargers. I remember that because I remember you drove your Tesla, but we saw some Tesla execs drive IC cars.
Yeah, I remember that.
Because
Didn't
yeah,
we didn't we go to the Model X event first? So what didn't we go to the Model X in 2000, end of 2015,
or
or
was
was that
that?
2016?
Yeah, I forget.
I think I met you at the Model X event the
Yeah,
first
yeah, we
time.
were
But
hanging
then we
at the
went to the
Model X.
Gigafactory
Yeah,
thing later in that next year or something.
yeah,
But yeah, it was, I remember, yeah, the execs weren't even all driving Teslas for a
yeah.
while. It
I
was
was just like,
crazy.
oh man, Emmett is driving a Model S here, but some of these other execs are driving IC cars. It's because like there's so many super people waiting in superchargers, right? It's
Yeah.
just faster with the IC car sometimes. And then you got a, Model X, right? When did you get your Model X?
Yeah. Yeah. I mean, this was a real stretch financially. The Model X signature deposit I put
That's
down
right.
for, and, really couldn't, I was really stretching, like borrowing from my personal, my brokerage account to pay for it and such. And, I was doing better at my job too. So it was a little easier. But yeah, I got that. I was one of the first, I think, thousand or a few hundred Model X's. This was a signature. And
Yeah.
I can't remember exactly when I got it. I think it was end of the year 2015, I want to say, and or January 2016, something like that. And yeah, there was a lot of bugs with that signature version, but it was amazing. Those Falcon wing doors. I just had a third kid and three kids in car seats, and that bench in the middle was awesome with the Falcon wing doors. So easy to put them in. And, I was testing out the functionality, and I was like, this is so well engineered. I'd watched that Model X, unveil event multiple times and been so psyched to get that delivery.
Yeah, I noticed throughout the years, like just the money that you've put into, the early Tesla products, like, your Model S and the Model X, and that Model X signature was pricey, that's not a cheap car,
It was expensive. It was by far the most expensive car I've had. And
Did
then
you?
it was like I never use that acceleration, like they give you that crazy, it's fun for like a novelty sometimes, but
Did you take out another loan for that, or did you pay cash?
Yeah, no, I think we leased. I think leasing was available.
Okay.
We either did a loan or leasing for that one, and it was an expensive lease. Or it was like 1,500 a month or something more. I don't know, but it was fun. It was expensive. At times I thought, like, should I really be paying for this? But it was like building my conviction to hold on to Tesla and keep playing that leaps game with Tesla through that long stretch where I was trying to stay convicted on this company being the future. And I realized it's just a slower product life cycle along the way that, people get new phones, people compare it to Apple, people get new iPhones new phones every 2 or 3 years, but you don't get a new car on average for 4 or 5 years. So I just realized it would take a little bit longer to play out.
Yeah. How would your investing experience with Tesla be different if you didn't purchase those cars, throughout the years? You got the Model 3 early on, right? When did you get yours?
Yeah. I was like in 1951 on the Model 3, so I can't remember exactly when that was, but it was early on.
Or so.
There's a couple little bugs in it, but I know early on. And I also got the solar roof. I was the first.
That's right.
I think I was the first or second paying customer in the Bay Area, San Francisco Bay Area, to get the solar roof installation. Like,
that's right. And it wasn't cheap either, especially early on.
The expensive version.
Exactly.
Yeah, I got the expensive version, and sure enough, I'm like, man, can I even afford this? And at times it was like, man, can we send our kids to the school we want to go to, or should I pay for the solar? Just making decisions, We ended up doing all of it, but it was risky for a little while. And like you said, like you asked, if I didn't buy all those products and have those amazing product experiences personally, I'm not sure I would have stayed invested in Tesla like I did. Like I might have exited, earlier on or diversified more, at least. But being an owner of their products like that, you experience it and you realize, like, everyone's going to love it. Anyone who tries this is going to love it. And then you see friends, you push it on friends, and friends get a Model S or a Model 3, and then they're loving it. And then their second car a year or two later is like another Model S or Model Y or 3 or whatever, so you see all that happen, and you just realize, like, this business is going to really take off.
Yeah. I noticed, I think with Tesla, it's like, once you know the product, right? You own it, you drive it, you compare it with other vehicles, then you start to really understand that this isn't just marginally better than other vehicles. It's like a different paradigm, completely different approach and value system and everything. And it goes pretty deep. And I think that's, at least for me, I think for others too, it helps to be able to discern the arguments from the shorts. You start to hear all these arguments and you start to realize, wow, they don't really know the product, like they just discount it, right? They don't really take it seriously. And all of their arguments are based upon all these other kind of random things. It's not based on the product. And I think being a product owner early on, is a huge advantage for a lot of, Tesla investors.
Absolutely. Yeah. Like you said, the bears, most commonly, they don't own the product. And a lot of them never even test drove it, right? And that's just a tell right there that they don't really know what they're talking about. And a lot of them, they're just talking about paper accounting things. And I'm not an accounting specialist or anything, but I know how to reach, or I know how to find the specialists on these subjects, right? Specialists that I trust, right? So whether it's from Tesla Motors Club forum, there's, like a username called the accountant that knows stuff backwards and forwards. And that's more recent, but there's always been users on that forum that are experts or accountants for their professional career, and they dive into the details and explain things. So you can kind of go into the weeds that way in those niches of the investment
Yeah.
research by reaching out and in Twitter, especially, you find the specialists in each category and you learn who to trust on that stuff.
Yeah, I noticed I think one of the things I'm enjoying about my channel is as it grows and gets more exposure, I'm able to invite certain people that I think have some special knowledge or really focused knowledge on an area. And so yeah, I was reaching out to the accountant on TMC, and he's like, well, I'm not ready for a public interview, but we can chat privately. So I'm like, oh, that's kind of cool. Or like there's this neural net expert on TMC named Jimmy D, and I'm like, hey, do you want to come on my show and let's talk about neural nets? And he's like, yeah, sure, why not? And so,
Yeah.
I got like 50 questions on Twitter to give to him on this interview. But it's cool because even though like on a forum like Tesla Motors Club, they can share at a certain level, if I bring them on here, I can really go deep and get all my questions answered. And then I can share it with other people. So then other people benefit too. And so it's like, it's kind of a cool thing where I can like pick out those who I think, might have some insight on, Tesla or another company, and then learn myself and share it with others. So yeah, it's, yeah, I totally know what you're talking about though. Yeah. Picking those
Yeah,
people.
no, I love what you're doing here. I think I've watched or listened to every one of your interviews. I usually listen when I'm walking or in the car, but I've listened to them all, and I think you do an excellent job. Yeah.
Yeah, lots of fun. I'm curious. Also, you caught Bitcoin pretty early on too, right?
Yeah.
I know throughout the years you've been a pretty strong proponent of it. When was kind of your first exposure to Bitcoin? How did you get into Bitcoin early on?
Yeah. So Bitcoin, I think I read some article about it in 2011. I think it was 2011. Must have been 2011. Um, and it just caught my eye, like, this is interesting, this cryptocurrency thing, and this how it's open source and there's only going to be a certain amount, so it defines the scarcity. And I thought, at the time I didn't have a lot of, I didn't have a lot, so I put like a couple $1,000, and I think the Bitcoin price was like $20 or $30 at the time, and so I bought, however many I could at the time for like 1,000, and that was a big investment for me at the time, but it was fun and exciting, and I started telling all my friends and family and my parents about it, and a couple of people bought into it, and they were like, yeah, that's cool. And, my dad was skeptical, for a while or whatever, but I just thought that it was unique and there was a need for it, and that if it caught on, if enough people bought it or got into it, if it gained like a critical mass, which it might have already had, I thought that it would just go up exponentially to become like a digital gold. Like I wasn't so sure of the digital transaction aspect of it, like the functionality. I didn't know. I saw like news reports of people trying to use it once in a while, and like Starbucks or, some places in New York City that offered it for like news publicity or whatever. But I never did that myself. I just bought it to buy and hold, like as a long-term investment. And then when Mt. Gox, I don't know if you remember that exchange, luckily before Mt. Gox went down, that was like the main exchange you bought and sold it on. I had taken half of my Bitcoin off and put it in cold storage, luckily like a few months before it went down, or a month or two before it went down. But yeah, I lost half my Bitcoin when that thing went down, but I have the other half in cold storage, and I keep it in the USB stick in a Faraday bag, just in case, there's some like crazy solar flare or EMP blast that protects it, just doomsday prepper type thing. I'm not a doomsday prepper, but something like that happens and erases everyone else's cold storage, and yours survives, and guess what? Yours is worth 100 times more all of a sudden.
Exactly.
Yeah. So it's a small amount of my net worth at this point. I mean, it's enough to be a hedge against. A hedge against politicians is what this guy I like, Naval Ravikant, who you and I have talked about over the years on Twitter. I think that's what he calls it, but I think that's a short way to put it: a hedge against politicians.
Yeah, I'm curious, like, with kind of your whole thing, I guess with Bitcoin, like over the years, like how like, I'm curious, I guess more specifically with Bitcoin, like, it doesn't seem like you come from like a technical or a computer background, right? Like you don't really,
That's right.
yeah, like, and you lived in the East Coast mostly, right? Is that,
Yeah.
I mean, where, I'm curious, actually, I've never asked you this. Where did you go to college?
Oh, that's a good story. That's a good question. So, I actually went to three colleges. The first two I got kind of kicked out of. My priorities were not very good early on, and in Boston,
Okay.
Boston University and Northeastern didn't make it a full year at either one of them, and kicked out for substance abuse type stuff, and then I kind of got my act together and ended up going to Fairfield University in Connecticut. It's a smaller regional school, but um, I just wanted to get through college at that point, and I majored in communications because I was like, that's an easy major. Just show up, and sometimes you have to give public presentations, and you get A's,
Mm-hmm.
and that's what I did. And even though I'm afraid of public speaking like everyone, I just felt like I didn't have to read a whole lot of books or
Yeah.
do a whole bunch of reports. And so I finished up at Fairfield University and graduated in 2001
Okay.
or 2002.
So what
Yeah.
was your major? Oh,
Communications. Yeah.
communications. Okay. Got
Yeah,
it.
but it actually taught me a lot because my strong suit has always been math and numbers,
Okay.
and I've always been so fascinated with the stock market.
Okay.
And I wanted to actually go into the stock market in 2001 or 2002 when I graduated, but it was sort of a recession. It was impossible
Yeah.
to get a job, so it was hard
Yeah.
to get a finance job right out of college.
Yeah, because I noticed with the early Bitcoin folks, a lot of them were really kind of computer kind of geeks or people really into technology. But I'm interesting,
Hmm.
like, how did you kind of catch the novelty or the potential of Bitcoin when you didn't really have a computer, let's say, background?
Yeah, I mean, I think it's just I when I first read it, it sparked my curiosity. When you get curious, you
Hmm.
have passion to learn about it, and something about it, like this whole Byzantine generals problem that it was solving.
Hmm.
And I like math, and I wanted to read about that. And you know, um, I just thought like this is the future. Just something clicked in me, like in the future, I could see this being like a real thing. Like,
Hmm.
why is physical gold the end all be all? Like, why can't there be a digital gold? And
Hmm.
so I thought, the more I read about it, the more I was just really sure. And I'm sort of a risk taker, a gambler. I'm
Hmm.
not, you know, it's a funny story how I got my first $5,000 to put a deposit down on the Model S is I bet on the New York Giants $100 their second Super Bowl run and just kept double downing until they won. It was $10,000 suddenly. And I was like, wow, I'm going to use half this now. Finally, I have some money to put down on a deposit because we didn't have extra cash to put $5,000 down on a deposit.
Hmm.
So, I'm a risk taker always to some degree, and I
Yeah.
like playing poker,
Yeah.
and
Yeah,
so
actually, I want to dive into that a bit later on in the
sure.
conversation. This whole idea of kind of risk taking and versus kind of less risk taking, and kind of the
Hmm.
advantages and disadvantages of both. Like I know a lot of people they have a hard time, I think, putting together both. Like you tend to side with one angle or the other. Like a lot of long-term investors, they look down on traders, right, and options, etc. But I've learned throughout the years, by knowing people like you and others, that you can't really look down on like short-term trading because the potential is just so massive.
Yeah.
And like there are a lot of course, horror stories or people who take risks beyond what they should, and they lose more than they should, and obviously like, controlling your risks is a big issue or a big thing. But for those who I think have their head on and know how much to risk and know that it's going to be volatile, they're going to lose some, but they know that when they win, they can win huge and that will outweigh like, 10 bad trades, etc. Like if the people who catch that and they you know like some people have done very well, and I think I respect that, in some ways because in some ways like long-term investing it's a different time frame. It's a longer time frame. Let's say maybe I'm looking at holding a stock for 10 or 20 years, but in a lot of ways I kind of think some of the concepts are similar. You're taking an asset that you think is undervalued at the moment and you think it's going to be valued higher. People are going to treat it as a higher value asset at a later date, but the time frame is different. Like a long-term investor might be looking at 5 or 10 years, but a short-term person might be looking at, let's say, 3 months or 6 months or something shorter. And but the conviction and the strength of conviction might be different too. The long-term person might have a stronger conviction because it's the time frame is longer, but the short-term person might have a little bit lower conviction, but the conviction is similar in the sense that they think it's going to be valued differently, radically different in a period of time. And I think that to me like brings together the short term and the long term together. But yeah, I kind of actually, well, I guess maybe we'll push. Let's push that off to a little bit later because I want to ask you about some of the trades that you've done this past year. So I wanted to ask you about this first kind of trade you did this year, which was the QQQ. And I remember actually, and one of the reasons why I could we could talk about this freely is because this isn't something that I just found out after the fact, right? So, I mean, I remember you told me back in January, February, December, or I remember last year you saying, I'm thinking about setting up an LLC, so to track my trades to make it more formal. And then I remember you texting me telling me that I think in January or so you put in 100,000 right into your LLC. So you had your LLC 100,000, and then you had your personal account, and then you had your IRA, right? Those three accounts basically. And I remember, back in January you're like, gonna make some trades, etc. And so this whole thing, COVID hits, right?
Yeah.
And so you short QQQ at the end of January, is it?
I bought a bunch of puts in the NASDAQ ETF QQQ. Yeah. Short-term puts in the end of January in my personal account, not in the LLC yet.
I see. Got it. So for those who aren't aware, QQQ is basically, it tracks the NASDAQ 100. It just it's a way to track the market. So you buy puts on that at the end of January. What was your reasoning for that, and what were you expecting?
Yeah,
Actually,
I feel like I've gotten
more importantly, how much did you put down? Like how much of puts did you buy?
Yeah, the first trade I think I bought just in my personal account, like 800 contracts.
Okay.
And this isn't the actual index puts, which is like a symbol NDX that trades on the SIBO exchange. This is the ETF index. So it's a normal option contract of 100 multiplier. And so 800, I guess, translates to 80,000 shares of QQQ or something like that. You're shorting, or you have exposure to that at a certain strike, that whole option thing. So I bought that, but it was only 2 weeks of expiry at the end of January, just because I've gotten pretty good at, I think, sourcing information. Like people have told me I'm very good at seeing things differently, maybe because I've taken a ton of information from different sources. A lot of times sources I don't agree with, even I've taken information to consider it, and I'm skeptical of all the information I take in too, even from sources that I normally do agree with, right? So on Twitter, for example, I was just observing what was going on in Wuhan, and I just really thought, like, this looks serious. Like, this isn't just some social media ploy. Like, this might be the real thing. This might be a real bioweapon or escape or serious pandemic, and so I was like, when this comes around and in the US or Europe, like, there could be some serious panic in the market. And I was worried about, my LLC's portfolio, my personal accounts portfolio, my IRAs, so I realized I should buy some of these index puts to hedge myself. I've never really done that before, I never, but I know that's what you should do if you think something serious is going to happen. So the first time it was like 2 weeks out and it expired worthless, even though there was more fear building up, right?
Yeah.
But by that time, it expired in early February or something like that, February 14th or so, I don't know, something like that. NASDAQ was even higher than when I bought the puts, right?
So how much?
Still going up.
Yeah, how much did you lose on that trade?
Oh, on my personal account, I think I lost a couple 100,000, 200,000, something like that, But I had gains I had taken earlier already to offset it with. So the way I looked at it was like, well, I'm buying these puts half off because otherwise I'd be paying, you know, capital gains taxes or income taxes on some short-term gains that I luckily, you know, I realized earlier. So I was like, even if I lose these puts, they're going to go against some of my capital gains, cross off some of them. So it's not as, you know, anyway. So the second time I was like, I still think this is going to come and the stock's even higher, but you know, I can't time this in 2 weeks. Like that's just too risky. So I'm going to go 2 months out. So I think NASDAQ, the QQQs were like $235 or something like that. I forget. I don't know where the NASDAQ index was or what that corresponds to, but QQQ was around 235. And I bought the puts and I thought like, I think when this comes, I think there could seriously be a 20 to 30% drop in the market, like pretty quickly, you know, because it's gone up so much too. So I bought, I think 200 strike prices for the puts that were like 2 months out. They expired in like late April or something like that. And then sure enough, like a few weeks, the next week and the following weeks, it like started tanking the market. And I thought also like, this is like sort of lucky or I don't know, foresight or whatever. I thought my whole, you have to know when you're going to get out of your trade, right? You can't just buy a trade and expect it to, you know, you have to have a plan, right? My plan was when the fear index was the highest in the US, like when I thought like what I was seeing in Iran by that time and in Italy on social media, like citizen journalism, you know, I thought was serious and that's bad, you know. And when that type of scene comes up in some city in the United States and it's publicized in mass media in the United States, that's when I'm going to get out because that's going to be the worst, I thought, you know. And so sure enough, New York City gets hit hard, right? And it's sort of like that same kind of coverage is happening and everyone's thinking the world's ending, this is terrible. And I'm like, all right, I'm getting out now because I made 20x my return. The NASDAQ was at like 180 at that point. Wow. Okay. I'd bought the puts for like $1.20 or something. I sold them for like $25 or something like that. So I also had bought them in my LLC and my IRA account and my personal account that second time, which was good. So the first time I bought it just in the personal account because that was like the bulk of my assets. And the second time I bought it in all three accounts. So yeah.
Got it. For those who don't know, when you buy a put, so the QQQ was at 235, you bought a 200 strike put for 2 months out. What that means is it gives you the right to sell your QQQ, I guess 100 shares per contract at a price of $200, right? And so when QQQ drops to 180, then you have a 200 strike price. You could sell it for $200, but the actual price is 180. So the price of the put is that $20 plus time value. So basically, yeah, I mean, that's a huge trade because to buy it for what, $1.30 or something, right?
$1.20, I think.
Yeah, something around there. And then to see it go up 20 times in value within a month or so, right? Basically.
Yeah, a month.
Okay,
yeah,
and then
when there's still like a month left to expire. I sold it in March sometime, I think.
And then you exit, you know, close to the bottom. Part of that, you know, is like, I guess you had your own framework, which is, you know, fear index at the highest. Part of that probably is kind of luck too, because like, it's hard to tell exactly. I mean, luckily the Fed came out, you know, just a few days after that saying we're going to do unlimited QE, you know, backstop the market at all costs, right? So that helped, you know. I'm curious though, yeah, like the total trade, like how much did you make out of that, like in your different accounts?
Yeah, I think I made like, I must have been, I think I made a little over in all three accounts, like 2.5, almost 3 million. Yeah. Okay. And then I used that cash like over the next month, like just to make sure the stock market wasn't going to keep going down. I wanted to make sure it's going to come back, you know, as it started to come back. I used that cash, you know, in my personal account mainly to buy Tesla stock because I was like, I'm just going to buy the stock. There's the options. I'm getting heart attacks with the options, you know, like this is the time just to buy the stock. I bought a whole bunch of Tesla stock at like 420 before the split when it was coming back from its like 350 or 380 low one day or whatever the next day. So I bought a bunch of stock around there. And I also sold some Tesla stock when it was like on the way down around 700 before that. So I did really well on that in the personal, but in the LLC account, I wanted to diversify a little bit more and employ my kind of strategy to other other names and stuff. So I bought, I think you and I chatted about Square as an interesting option, for example. So I had bought Square Leaps. I think Square was trading at like $50 or 40 or 50 or something like, and I bought like 120 strike leaps, I think. And for like a couple dollars, or something, $3 or $4, but for like 2 years out, because I think the leaps short term, like you said, it's risky. And as much as I like to take risks, I think the leaps, the longer term options, is the best risk reward. Sometimes it's better for my stomach, at least,
Sure.
a lot of times. But so I bought Square, Peloton, Leaps, or the Peloton didn't go out that far, but I bought 60 strike, and now it's like 120. That was like $30 at the time trading. So that was good. It's a couple others that haven't been quite as good yet, but I still think I have time to run more.
So then you stuck most of your money, I guess, into so Tesla stock, but also different calls of different companies. What happened after that? Like, did you just hold on to these companies?
Yeah, I've been holding on to them. I haven't done much. I've, had a little extra cash in my LLC account to play around with. I tried to time when Nikola, I've always known Nikola as you and I both know it is, and anyone who's followed Tesla for a long time seriously knows it's sort of been a scam with that guy and such. Maybe he really believes what he's saying, but he's just crazy. I don't know. But the whole hydrogen fuel cell thing is just never going to really pan out too much. And so when Nikola went up in earlier mid-June, I think it was after some SPAC deal or some deal, it went up to like 70 or 60 or $70 from like $15, and I think it was right after the SPAC was announced or something, or some corporate action. I just thought, like, man, this is crazy. Like, how did this market cap triple like over the weekend, or over a couple of days? And I think it was like a Wednesday, and it was trading at like $69. I just thought there was a chance it was going to tank. The puts were so expensive, though. Shorting the stock was impossible, like to find a locate. And if you could, it was like very, very, very expensive. But the puts were even very expensive. But I just thought there was like a 20% chance or more that by the end of that week, within a few days, the stock would just crash back down to like $30, even though, so I bought these 48 strike puts, and the stock was at like $65 or $70. And, the next 2 or 3 days, they were only like 2 or 3 days. It was like the most short-term trade I've done. But, you can't be afraid to take these types of chances, and the stock went down to like, I think $50 or $54 or something at one point, but then it went back up. And so that turned out to be a worthless trade, but it was like $20,000 or $30,000 of my LLC account, which was a small percentage of my LLC account at the time. But yeah, so I took a risk there too, and it doesn't always pay off.
Yeah. And then in your personal account, you ended up buying Leaps, right, with Tesla as well.
Yeah, so in my personal account and the LLC account, I bought a bunch of Leaps in January, and I've had Leaps in my personal account since last year, or a couple of years ago. I've had Leaps in my personal account all along. I just keep rotating them every couple of years, as cost effectively as I can.
Like for those who don't know, Leaps are long dated option calls. So they're a contract where you can buy stock at a certain price, but down the road, and so you pay for that ability or that contract to buy like stock at a certain price. I remember back in the day, this was like 2014 or something. I remember I wrote on Tesla Motors Club kind of a strategy to kind of use stock and Leaps, together. And when you think the stock price is high, you just transfer all your, Tesla to stocks. But when you think the stock price is really low, right, it's in a lull, then you kind of transfer it to Leaps. And so you kind of, take advantage of, right, the leverage. But the problem with that strategy is if the lull is like too long, right? Then you get smashed because you're waiting for this like thing to go up, but let's say you run out of cash, or you give up. Let's say before it starts to go up because like it's just been too long. I mean, what's been your experience, kind of holding on to, let's say Leaps, these option calls, and like let's say in the case of Tesla, it just wasn't going up for the longest time and your account is bleeding money, like, what do you do?
Yeah, that's a great question. I mean, I sort of employed that strategy myself. I thought the same way. And I don't know what year, 2016, 17, I transferred a lot of the stock I had exercised from the earlier gains in 2014 or 13 and 14 into leaps in my IRA account, especially where there's no tax consequences when you do that. And my IRA account went from, I don't know, like 500,000 to like a year ago, I think it was like 70 something thousand. So it dropped substantially. I still had a bunch of leaps. They were like 450 strike leaps for January 2021. But a year ago, those were trading very cheap, compared to now. And those 450 strikes after the split are now what, $90 or something like that. So back then, like you said, it's painful. And but because I spent so much time, I spent thousands and thousands of hours like researching Tesla to like keep my conviction going, and try to look for faults in it, in my belief, and I couldn't find the faults. And I just felt also because of 2013, 2014, where I had that big windfall, that it was sort of like house money psychologically, to speak, I guess. Gamblers, they talk about house money, like if you win a bunch of money, you can keep gambling with that money, and it's just money you won from the casino house anyway. So you kind of emotionally detach from it in a way. And so part of my thinking was a little bit of that, but also I had a job that was stable and paid me well, and I could survive on my retirement plan with that company that was separate. So it was almost like completely compartmentalized or segregated from my, main personal, living. So those two things, I think, helped me stick with it. And the fact that I just, studied it, like you do, probably not as much as you, or maybe as much as you, I don't know. But I would read those Tesla Motor Club's forums all the time. At night, I'm on it. My wife's like, "What are you doing?" I'm reading these Motor Club. You skim through it, and you read Twitter, look for it, or you read all the analysts you can, and you just know that the company is going to be very successful, and it's just a matter of time before the stock would catch up.
Yeah, like I know some other folks too that like, really just, believed that Tesla was just like undervalued and suppressed. And they just kept on, holding on, buying leaps, but just getting really destroyed, especially like, because the expectation was like, hey, 2018, we're going to see a huge, spike in the stock price as Tesla gets profitable and everyone finds out. But then 2018 becomes this like long, like, disaster or, drama story. And then 2019, it's not looking, that great, at least the first half. And yeah, I have a friend who just like got demolished, because he was just holding on to leaps. And like, for when I look at that, I'm like, like, it's really like really demolished. Like, like we're talking like, losing 95%, let's say, of your portfolio value or something.
Ouch.
Yeah. To the point where it's like, you don't even have that much left, and,
Painful.
Yeah. It's painful. And then like for when I look at that, I'm like, wow, man, that's just painful. And, I think most people would just give up, it's like, hey, that's it. I'm out of investing. Fold the towel, it's over.
Yeah.
But like this guy, he just like, he kept at it, and he saw, I don't know if the numbers are exactly correct, but he went from basically like 1 million in his portfolio down to like 50,000, right? Through this whole time. And he's still holding on to leaps, like rolling them out, right? Basically.
Wow.
And I'm like, wow, I'm not giving feedback because I'm like, wow, you lost a lot, and you're still like doubling down. And then it's like winning the lottery, right? Because Tesla stock goes up, and for some reason the guy doesn't sell, just like he's convinced that this is just the beginning, right? And so he holds his leaps, until Tesla's like 1,000, 1,500, 2,000 and whatever.
Yeah.
And then he emails me, as Tesla is over 2,000. He's like, hey, I've made, several $1 million or something. My retirement is now set. And like, I'm glad I held on, etc. Right? And it's it's like, wow, it's like these type of stories, like, I don't know if I would completely believe it if I wasn't like I didn't know these people personally. Like I actually know them pretty well. Like I've seen them over the years, many
Okay.
corresponded, met them in person, etc. I've seen the ups and downs. So it becomes real. It's like a real life thing, It's like wow, you go from 1 million to 50,000 back. You go to 3 to 4 million or 5 million, I think, etc.
Yeah.
With
Yeah.
and it's the power of like it's not just the power of like options, but it's combined with these radical volatile moves, in the market, especially with certain growth stocks following a long period of suppression, right? Of stock price suppression. And so
Mm.
it's like, I'm wondering in your case, because in some ways that is, I wouldn't say pathological, but there is an element of like, it's like, is this guy thinking, sanely? You see your
Yeah.
IRA drop from 500,000 to like 70 something thousand dollars, and most people would be like throw in the towel, I'm done. But
Yeah.
for you, you have a different perspective, right? And again, you're saying you had a nice job, high income, high savings, retirement, et cetera. So that cushioned a lot of it as well. But
Yeah.
to have that big of a loss, and also your personal account had a bigger loss, right? I'm guessing, right?
Big loss. Yeah.
Yeah, from that
Yeah.
period.
Absolutely.
Um,
Yeah.
and so when you're down, let's say, I think a year ago, what your IRA from a year back from now, it was what, you said 70 something,
70 something
77 or
thousand.
something,
Yeah.
right? And then your
Somewhere around there.
your personal account was what? It's like
I think
around
it was like 500 or somewhere between 500 and a million,
a
I don't know,
million or
something like
something like
that.
that. Okay.
Which was a lot higher than it was before the 2013, my
Yeah.
IRA and my personal account before that 2013, 2014 windfall was like, they were both like $10,000,
Oh, okay. Yeah.
So
Yeah.
they both went up a lot, but
Okay.
yeah, my personal account now, it was as high as like 3 million at one point, and
Got
then it
it.
went down to like 1 million
1 million.
or
Okay.
less. I
Yeah.
think it was 500,000 by a year ago. Yeah, maybe even that low. Yeah.
Yeah. Okay.
So
So
I lost a lot.
yeah. So you see this, dramatic. So you've gone through a lot of ups and downs, right?
Yeah.
Ups and downs. Is there something you think about your personality where you're just a little different, like psychologically at all, or just like your view of money?
Absolutely.
Like, is it
Yeah,
just with your relationship with money, or do you see something a little bit differently as well? Just like in general, are you just a little bit different in how you view things?
absolutely. Yeah, a lot of people say I'm, I just see things differently. I see opportunities a lot of times that other people might not see, or, if I see, something happen in the news or whatever, I might have a different take on it than most people. Um, and then people might say like, that's weird, why would you think of it that way? And then I'll say, oh, how do you think of it? And then it would be kind of weird to me to think how normal people think of something, and
Hmm.
I'd just have to adjust, or I'd have both ways of looking at it. So there's certain things I see, that I think maybe I have conviction in myself, enough confidence in myself,
Hmm.
like you and I have talked about like diet, nutrition in the past, for example, right? And so, for example, I think, we talk about coronavirus. I think we're in the worst epidemic of our times in terms of obesity, and no one talks about it. Nutrition is terrible in modern society, and tons of people die. We don't even talk about it. It's like
Hmm.
just accepted. And so I see a big picture there. Like, how come no one, so I just see certain things that I see the world differently, I
Yeah.
guess, in a lot of ways, and it helps me and it hurts me in certain
Hmm.
ways, maybe. But I think it helps me in investment opportunities potentially.
Got it. I asked you earlier today to send me some uh, portfolio, what your portfolio is right now, right, in your
Sure.
personal IRA and LLC. And you sent me some screenshots. And from your personal, you're at 22 million. So we're recording this right
Yeah.
now, Sunday night, November 1st, right? So,
Yeah. After a really harsh day on Friday, I'll tell you,
yeah, I
that
mean, that
hurt
was
me.
that was a painful day. Yeah. So 22 million in your personal account,
Yeah.
5.2 million in your IRA, and 5.7 million in your LLC.
That's
So
right.
yeah, so we've got about what 33 million right now in those three accounts. And then
Yeah.
I remember you're saying you pulled um what you said you pulled
3 million out
three
of the
million.
IRA to invest in a SpaceX fund. Yeah, I did
Got
that
it.
earlier this summer at
Okay.
a 38 billion valuation. It was pretty
Okay.
lucky. I had that opportunity to do that, and I was jumped on it as soon
Hmm.
as a friend, guy I know works at a company called Shares Post, and
Yeah.
he came across. It's like, I'm doing it, and I spent like the whole week just making sure I got all the paperwork done to do it, because I was like, this is once in a lifetime, got to do it.
Got it.
So yeah, I did that in my IRA account
Hmm.
actually, which is nice. So there's no like tax
Oh,
issues to
that's
worry
good. Yeah,
about,
yeah. Okay. And then you also pulled some money for a house, right?
Yeah, so I pulled money from my personal account. My life's changed in the last
Yeah.
year dramatically because of this, and so I'm working from home with the COVID, and I
Hmm.
have a small, 1,800, 2,000 square foot house with three
Yeah.
kids and a wife, and so we got a bigger house that has a
Yeah.
home office, and so I pulled money to buy that house, and we're renovating it right now before we move
Yeah.
into it. And got a house for my mom and mother-in-law to kind of live in together and share, which is not, so
Yeah.
like what do people do in the NBA when they get a big contract? They buy a house for their mom, so that's
Yeah.
kind of what I felt like
Yeah.
was good to do, because they
Yeah.
both live far away, but they can kind of stay with us,
Yeah.
if they want,
Yeah.
but not in our house, but at a house nearby.
Yeah. So the 33 million is not including, right, the 3 million you pulled to put into SpaceX plus money for a house. So we're looking at, probably something closer, what, high 30 millions, right? Um,
Yeah.
Compared to a year ago, right? I asked you to send me like a year ago, um, your, um, I guess actually have the figures here. So a year ago, your personal account
Yeah.
was around a million. It seems
Yeah.
like what I wrote down, and then
Yeah.
your IRA was 76,000. That's what I wrote down. So your and that was pretty much all your assets, right? I mean, you
Pretty
had your
much. And then I
house
had a
though,
few
right?
100,000 with a 401k and
Okay.
a stock plan. But yeah, altogether, if you go a year and a half when the Tesla
Yeah,
stock was $180, it was like
probably
a lot
lower.
less
Yeah,
even.
that's
Yeah.
true. So let's say you go from a million about a year ago, and then you go up, you you see your net asset worth go up to 30 to 40 million dollars, right, in a course
Yeah.
of less than a year. Like, how do you process that? Like, what's going through your head?
It's hard to process. It's wild. I mean, especially in the year of Corona, like,
Yeah.
it's when you're in lockdowns and going crazy with kids at home, young kids, trying to keep them busy and juggle all the stresses of everything. And a year ago, if you asked me like, hey, Emmett, what do you want to do? What's your dream to do? I would have said, oh, I want to start a hedge fund to make a lot of money. I think I have that would be my purpose, an incentive to just start a. Hedge fund. And then all this happened and I made a ton of money and I was like, well, the world's different to me now. I have enough money. I'm not really interested in just making more money to start a hedge fund. That's not really
Hmm.
something I want to do. And I kind of thought about it and prayed about it a lot. And at some point I realized, if I do have some special ability to have these like amazing investment opportunities to realize, if I have some God-given ability that others don't, instead of just using it selfishly to build up my own personal accounts, I should start a hedge fund, but do it for something good, And so that's when I started preparing for this next phase of my career where I left my current job, which was very good. And I really liked it and I was treated very well. But I just felt like, once your net worth is a certain amount, you shouldn't be working for someone else. You need to do something a little different.
Hmm.
And so this hedge fund that I'm doing now is more of a charitable thing where there's half the fees is being written into the prospectus that'll go to charity. So that's hopefully, if it does really well, the dream would be others follow suit and it starts a whole new breed of investment managers that, write into their prospectus that a certain percentage automatically goes to charity.
Hmm. Hmm. Got it. I'm curious, like, seeing your, net assets go from a million. I guess you had your house too, right? You had it, and you put a down payment, so it's probably more than a million of net assets before that, right?
Yeah, I mean, the house, we had a big mortgage on it.
Yeah.
We didn't pay off the mortgage on this house, but when we bought the new house, we just paid it all off. We
Okay.
just paid cash for it.
Yeah.
Yeah. But this current house we're in now, we never paid it off.
Yeah.
We'll just sell it.
So did you? I'm curious, as your net worth increase or net asset worth. I personally don't like the terminology net worth personally, just because like
Yeah.
I have a strong belief that material possessions don't really connotate or signify worth, in any real manner. So I
Yeah.
like to just compartmentalize it, saying your asset worth or net asset worth. So you see it, go from 1 million to 30, 40 million. Are you putting aside some of that for so-called, let's say, safer assets, or let's say income let's say passive income
Hmm.
or something to, in case
Yeah.
something happens, where, I don't know.
Yeah.
What's your take on that?
Yeah, it's something I've been struggling with. I mean, I have taken so much, I have so much capital gain. Like my first order of business is figure out how to most efficiently deal with my capital gains this year. I have
Hmm.
like something like 7 million of capital gains this year to figure out what to do with from the trades I did earlier with the Qs and then selling Tesla on the way down, buying more. So that's a huge tax bill I got to worry about, and that's really my priority in a lot of ways on the personal finance front. But at the same time, like you said, I need to find a better safety net in case Tesla does go to zero, right? But at the
Hmm.
same, then I think, well, I am confident that if that happened, I could find another job if I had to. Absolutely, it's not the end of the world, like
Yeah.
I'm not gonna. I've realized that money does not equal happiness. I have money and it's great; it can solve a lot of issues. But I know I have the capability to earn a salary if I need to that is comfortable enough if worse comes to worse. So I'm putting that up. What my dream is to kind of hold the Tesla stock as much as possible and sell deep out of the money covered calls, for income. And if some of those calls ever get exercised at some point, then I cash out at a good price for some
Yeah.
portion of my Tesla stock. But that's sort of my plan. Um, but anything can happen. The stock
Yeah.
market could get cut in half in the next week if some crazy election shenanigans go on, for example. I don't know. Who knows?
Yeah.
We don't know.
Yeah, definitely. Yeah, like I've kind of had this, investment approach where, I set aside, I have a kind of compartmentalized approach where I have some assets in real estate that are income producing and that can
Hmm.
cover kind of our living expenses, et cetera. And then the rest of my assets are more to kind of higher risk or higher reward, investing where I'm going after kind of the big opportunities. And so because I have kind of more of a safety net of certain assets, it allows me to take bigger risks with my other portfolio or with my main, asset portfolio. And I think,
Smart.
yeah, so in some ways it like I've always had this thought where I don't think most of the investment field is capitalizing on that true essence of investing, like on really investing in the big winners, like these huge, like decade winners, generational
Hmm.
winners, like these clear breakouts. I feel like
Yeah.
a lot of the investment field is kind of like tainted with a lot of fear and preservation of assets, and I completely understand that. But I think when you start to mix both, you have like different needs. You have one need where you do need some safety and security and retirement, et cetera, to take care of your family. But you mix that together with this need to grow your assets and you put them together, then you get this weird thing of like, of, like diversifying across these weird asset classes and you cut all of the potential gains and it
Yeah.
just becomes this weird like fear driven approach, and so personally, like I kind of have this thing where, if I'm gonna really, you know latch on to what I think is the true essence of investing and really these outsized crazy gains, it kind of helps me to mentally think, okay, I've got this other set of assets that are income producing that are not really correlated, and that, who cares if my portfolio does go to zero? At least, I mean, even if I didn't have this other basket of assets of income producing real estate, I have a similar attitude to you. Well, I'm okay. I could go to work, find something to do.
Yeah.
I'm not very particular in like needing to live in a big house or fat house. I'm actually happy with living in our RV,
Yeah.
except for when it gets kind of cold in the wintertime. But other than that, just hang out at the beach or
Yeah.
something. Um,
Yeah.
but yeah, it's like I guess I would be like, more leaning to that whole real estate as a potential for income. But the problem with real estate, I'm finding out more and more over time, is it kind of requires management because I mean we have one of our main properties that has like property management, etc. But it's like there's always things that prop up, you know
Mm.
it's like, and it's unexpected things that we just have to get involved with. And it's
Ugh.
like, yeah, it's just like, for example,
It's a
this,
mess
yeah, this
sometimes, right?
last week, you know, we got hit with a lawsuit. And I'm like, oh my gosh. And it's like, why or what? And it's like not even our responsibility. It's like, it's like a tenant who runs, like, it's part commercial. They run a store, and they got hit with the ADA lawsuit, which is basically a handicapped person comes in and they find it's not up to code, and they sue the store, right? And
Oh,
we have like
nice.
nothing to do with it, right? It's like the tenant's responsibility, but then the
Yeah.
lawsuit is put to the owners or something, right? And I'm like, geez, now we have to be calling up lawyers and trying to defend this suit, but it's not even our responsibility, and like having to get an
Yeah.
inspector out and all this stuff. And so it's like there is some downside, I think, to, in terms of, and Warren Buffett talks about this a lot, real estate is really interesting, except it's got this like overhead cost, this maintenance
Mm.
management cost, right, built into it. I haven't really looked into like, other forms of more passive, let's say. I mean, there's a bunch of, obviously more passive, investment options like REITs or, various,
Yeah.
dividend, plays, etc. But I mean, what are your thoughts on that? Like kind of, I mean, I know so you bought your house full cash.
Yeah. The new house that
So
we
that's in a
haven't
way,
won't move to yet. Yeah.
exactly. So that's in a way diversifying, right?
That
Some of your
is. I can always take
assets.
out a home equity line of credit or something on that.
Yeah, so
Yeah.
that's likely not going to go to zero, and then
Yeah.
you diversify by taking what 3 million into SpaceX. So that's
SpaceX.
another diversification play.
Yeah.
It's somewhat though correlated because if Elon
It
Musk,
is.
somehow, dies, disappears, etc., that is Tesla and SpaceX, Starlink is all correlated.
Yeah.
So you're
Yeah.
highly though, I guess, dependent on Tesla or Elon Musk, right? Elon Musk
Yeah.
is, um,
Yeah.
yeah,
Yeah, what I was thinking about, I mean, the thing, I hate taxes. There's only two things for sure in life, death and taxes, right? And I hate taxes. And that's part of the draw of the leaps of the long-term options, because they're always more than a year out of expiry. And so I like to hold them for at least a year. So if you do sell it for a huge gain, then it's long-term gains instead of short-term gains taxes, right?
hmm
Um, so especially in California now, the taxes are
hmm
absurd with at the highest rate and so forth. So, um, I mean, one thing I was considering is the IRA account has done so well. Maybe I should just sell that and put it into something really conservative and keep that cash in something conservative as like a real emergency buffer.
hmm
And obviously you don't want to take money out of your IRA before you're 60 because there's an extra like 10% penalty, right?
hmm
But if worse comes to worse, X million dollars with an extra 10% penalty can still help me out a great deal if Tesla went to zero.
hmm
But at least if I do that, I don't have to pay taxes
hmm
to diversify right now, right?
That's
That's what I'm
true.
really worried about is like, all right, I already have this huge tax bill for this year. Do I want to create a lot more of a tax bill for myself this year to pay the government the maximum? I'm trying to figure out, I'm donating to a foundation. I'm considering conservation easement partnerships as a possible way to reduce taxes. There's all these things I'm considering, and it's just kind of a headache because I don't want to pay the maximum amount of taxes. Because no
hmm
one with the amount of money I made, I feel like I'm the only one with this amount of money that would be paying the maximum. Anyone who's got this has all kinds of options to reduce their taxes, and I haven't figured that out yet. So
Yeah.
that's what I'm most concerned about in a weird way is like, how do we be more efficient with not paying the maximum amount of taxes just to diversify, and
hmm
so what I've thought about is maybe just the IRA account, just
Yeah.
getting out of all my Tesla exposure there and putting it in something
hmm
much more, just cash even, or
Yeah.
just, yeah.
Yeah. Yeah. I've been, like thinking about like the whole thing with like SpaceX, like I'm doing this series on Starlink. And so like last
Yeah,
week
I'm excited for that.
I put together this whole like research presentation, and this week, actually tomorrow I'm releasing it. So it's like a 45-minute video on Starlink with like 70 something slides. And as I get into it more, I'm just like, wow, Starlink is just a crazy company. I mean, this thing is like, it just has so many things going for it.
Yeah.
And it's,
Anything Elon touches, anything Elon does, you just know it's going to become gold pretty much. It's like
yeah.
he's done this time and again,
Well,
there's that, it's just like, why do people doubt his ideas or his
sure.
company still? Like, it's crazy. Like, any of them are going to be, sure, he might fail one or two, but
Yeah.
the majority of them are wildly, wildly successful,
True. Yeah. I mean, Elon isn't fail proof. There are times where,
Of
he makes his
course.
mistakes. Um, yeah. I mean, like, I think the more he's involved, though, the better. Like, for example, Solar City, he wasn't that involved. And I
That's
think
right.
because of that, SolarCity didn't have like this awesome, amazing, superior product, and they were kind of vulnerable, et cetera. But yeah, I think what kind of, my line of thinking is like, it's like, man, Starlink and SpaceX is actually like an amazing, I think, opportunity. I was actually, when you were investing in SpaceX, I was super tempted to get into it as well at
Yeah,
that
I
time.
tried to get you into it a little
Yeah.
bit. You were like, it had to be really fast. I
Yeah.
understand because I was like, I got to know by tomorrow, and you
Yeah.
were like, I don't know. And
Yeah.
if I was in your shoes, I probably would have hesitated and not done it too. Yeah.
Yeah. But I think for me, it's like, I have to look at a few things. One is, okay, it's not a true diversification play because it's still like Elon,
Hmm.
and number two, it's like I'm gonna have to pay taxes on my Tesla holdings,
Yeah.
and it's like it's not just federal taxes, it's state taxes as well.
Yeah.
And so I have to calculate all that. And so it's like, that's a lot, it's like
Yeah.
over a third of
Yeah.
whatever. So
That's why I did it. I was lucky enough to get it done in my IRA
yeah, I
account.
mean,
So I was
that
like,
makes
then
more
I don't have to worry
sense.
about it.
Exactly.
Yeah.
Yeah. But for me to like liquidate some Tesla or a chunk of Tesla, give, 35% or more, right? Let's say to the government and then
Yeah.
take the rest, invest in SpaceX. I mean,
Yeah.
that could make sense, but it's kind of like, yeah, it's not a clear cut thing because I still
Hmm.
see, Tesla as having an amazing like road ahead, for the next 10
Yeah.
years. I'd love to obviously pick up SpaceX. I do have some money set aside right now actually to get into SpaceX. I think so when the opportunity comes, I think I will.
Yeah. No, I
Yeah.
think it'll come again. I mean, there's these SpaceX funds that,
Hmm.
they have uh, people trying to get out from time to time, I guess,
Yeah.
and you have to act quick. Apparently, my friend works for the shares post
Hmm.
companies. He says it's like the hottest pre-IPO thing they
Yeah.
have, and when an opportunity comes, you got to jump on it. Or,
Yeah. Yeah, there's shares post. I was also looking into Forge Global. They're another big kind of
yeah, there's
secondary
a few of
market.
them.
Yeah,
There's a few companies that do this. Yeah.
yeah. So I want to actually ask you about like I remember we had like a text conversation back in December or so of last year, and your
Hmm.
whole thing was like, what if or what price would you cash out? Let's say
Yeah.
your
I
Tesla
asked you
shares,
that. I
and
remember. Yeah.
and your whole thing was like, Tesla this year could just, next year could go, just skyrocket, you know, 1,000. This was when Tesla was under $400, right?
Yeah, it was like three
Pre-split,
something.
right? Pre-split
Yeah.
price, and so you were like, hey, Tesla can go, $1,000, $2,000 or whatever. It's like, what's your price where you will, sell
I
your
tried to push you
shares?
on that. I was
Exactly,
like,
right? I'm like,
tell me a number, Dave.
yeah, exactly. I'm like, I don't know, what are you talking about, right? And
Yeah.
I'm like, I don't want to pay taxes and I believe in this company long term, but you're like, you're insistent on saying, Dave, what's the price, right? Is it
What's
1,000,
the number?
1,500, 2,000, right?
Yeah.
I'm like, yeah, 1,000, no way. I don't think I'll do 2,000. 1,500, I don't know. And then like 2,000, I'm like, that sounds interesting, right? But it all depend, like, I guess at that time, like on
Yeah.
different things, right? On, yeah, what I see in the future, et cetera. And the potential for Tesla. But I'm curious, like, for you back then to see Tesla, like it's 300 something dollars pre-split. And what is going through your mind at that time where you're like, whoa, man, this thing could just, go crazy? Because like I actually had a similar feeling too, because I'm like, this thing is like ready to pop, especially with
Yeah.
Model Y ramping, profit ramping, et cetera. So I'm like,
Yeah.
this thing could go, over 1,000, in this
Yeah.
next year. And 1,000 was like a lot, because it was like
Yeah.
300. It's like this thing could triple.
Yeah.
But for you, you were
Yeah.
thinking much bigger. You were thinking,
Yeah.
1,500, 2,000 or more.
Yeah.
What kind of got into your brain where you're like, whoa, man, this $300 stock could like, do a 6 or 7 times in the next year?
Yeah. Great question. I mean, to be honest, I feel like I've had that itch every year, like, hey, this thing's gonna go up. You know? But the itch was getting stronger and stronger, and
Got
then
it.
and last year it was really strong, and I was like, I really think this is gonna go up this year. Finally, it's been 5 or 6 years. So I was pushing you on it. I started talking to people. It was like, this is the year. Like the Model 3 is being produced, Model Y is,
Hmm.
coming out, and I just thought like by the end of this year, with the volumes they're doing, that they'd be profitable. The Chinese factories going to be producing, full throttle, and it just didn't, to me, all the dominoes were lined up just to be like, wow, shorts are going to get out. They're going to realize like this is a game of musical chairs for them, and you know, lots of more people are going to want to buy. And I also have this interesting theory that I feel like there's got to be some way to test it. Like maybe me and you can like one day come up with some way to like test this, but I feel like the more deliveries there are, right? Just like when more people bought the Apple iPhone, then more people were buying the Apple stock, right? And so the more deliveries there are of Teslas, the more retail people, and some of these retail people might be portfolio managers for a big fund or something, you know, who knows? And they're suddenly like, wow, I should buy some Tesla stock. You know what I mean?
Mm-hmm.
And so I just thought like this wave or this tide of Tesla was getting more and more likely, and that itch was really strong. And I was like, I'm going to set up this LLC. I'm going to start buying leaps at the start of January 2nd, as soon as I fund the account. And, you know, I'm going to save like 40% in cash in case Tesla dips. Then I'll buy more leaps at a lower price. But instead I bought the, index puts at the right time and got, so a lot of opportunistic things happened for me this year. I'm never going to have the type of return I had this year again. I know that I'll regress to the mean, but I still think my mean over the long term is going to beat the market, by a long shot. But yeah, like it just felt like it was overdue. It felt like 2013 all over again, 2012 all over again to me. Didn't it kind of feel like that to you? Like leading up to this year?
Yeah, definitely. It was like one of those things where, you had this 5 or 6 year just lull and suppression, right? And also media onslaught, right, against Elon and the company. Like there was a time in late 2018 or so where every single media outlet I could go on, like it didn't matter, like the political bent. Like it was literally every single, like CNN, you go to CNN, you go to Fox News, MSNBC, you go, whatever, any outlet was negative for Elon, right? Elon was just front and center. Tesla was front and center. Everything was negative. And it was like, it was like one of those things where you had this amazing, I think I call it a generational company, where the company's changing the world. It just has the most amazing product. They're executing with their heads down, yet the whole world is like ganging up on this company and its founder. And it's like, when you're in it, like for me, it was just so obvious. I'm like, wow, man, this is crazy. Like there is a media campaign or something, someone is doing something, to do something against Tesla. And, and in some ways it's just like that whole period of 5 or 6 years just, was a huge opportunity for people to, build up their positions, gain conviction. I think it was great in some ways because it tested a lot of people's convictions also, in the stock. A lot of things happened. So you came out of it, understanding the company deeper, also seeing the strengths and weaknesses of Elon, as well. It's like no one's perfect, as well. And you get to see some of the risks. Like some people, they don't in a way see much risk with Tesla. But I think for people who've gone through like lots of ups and downs and lots of volatility, who have, lost a lot of money as well and, gained, etc. I think, like, at least for me personally, I have this appreciation of the risks involved in Tesla. And for any company, like there's no company that's guaranteed, there is an amount of risk. And I think it's easy to discount that risk because you're so bullish, and you're rightfully bullish on the company, right? They have amazing lead. The future seems so clear, but, it's oftentimes not what it always appears to be. Like that's where I get a little bit cautious when everyone in the world seems to be saying it's a done deal, Tesla to $5 trillion or something. There's no risk involved. Like I completely get it, right? I'm a big bull. I see like the, highest likelihood chance, 95% or higher chance that Tesla just dominates, right?
But we could be in another 5-year long winter, right?
Yeah, exactly. That
stuck
too.
in this like 300 to 500 billion market cap range for another 3 or 4 years before it explodes up again, right? You don't.
Exactly.
It could happen. Could be the Tesla's MO, just to do that every 3 or 4 years, and I'm prepared for that. I'm in a good position now. I'm holding mostly stock this time, and some deep in the money leaps still, and it could happen. It might not, even though all this great deliveries and production and efficiencies are coming, they're outdoing earnings. It's possible the stock just might stay in this, like, if you talk stock price range, it might stay in, I tell I told a bunch of people, I think it could be in the $350 to $450 range until the S&P inclusion, if that ever happens.
Yeah. 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 I think in a lot of ways, like people get used to the climb. So as it,
Hmm.
jumps from 1,000 to 2,000, this is pre-spit price, but people
Yeah.
think like, oh, 3,000, 4,000, it's coming up. But
Yeah.
it's like oftentimes it doesn't work like that. It could work like that, but there's another angle where, yeah, there could be some macro issues, there could be different things going on.
Yeah.
Who knows? There's a lot
My,
of things.
my, my take on Tesla right now, like the key thing to watch right now is the S&P inclusion. That's my take. And that's been the key take for a while. That's been the trade I've been waiting for. Not the trade, but that's what I've been waiting for, to really like cash out of a small piece, for some of the longer term shares I have. I've been trying to wait for that, because
Hmm.
when that happens, and I think there's a better than 50% chance it'll happen this year, but it doesn't mean it's going to happen. Maybe the S&P just puts their foot down and is like, we're not adding Tesla for whatever reason, which would be terrible for them in the long run.
Yeah.
And that could happen. But when S&P announces it, the amount of index funds that have to buy Tesla shares is just huge compared to the people willing to sell Tesla, in my opinion,
Hmm.
And I
Hmm.
think there's so many buy and hold Tesla people right now that are just like, I'm waiting until it's 5 trillion, right?
Hmm.
And in market cap. And so all these index funds are going to have to buy it up within a month or a few weeks or whatever, they have. And I think that could, raise the price 50%, maybe 100% pretty quickly.
Yeah.
Probably not 100, maybe, but it's going to be a big potential catalyst, in my opinion. And I'm trying to wait that out before I start selling the deep in the money covered calls. But I feel like even if I sell the 800 strikes, which I think are the highest there are,
Yeah.
I'm like afraid those are going to get called if the S&P thing happens. And like, I don't want to lose out on that.
Uh-huh.
I'd rather sell the 1,500 or 1,200 strike calls when it's already at 800.
Yeah, yeah, yeah.
Yeah.
Yeah, exactly. I put out a video. One of my first videos like was in this, or at least for kind of this new launch of my channel, was December of last year, where I'm like, hey, S&P 500, we're gonna, most likely get included, next year in 2020. And, I've been looking forward to, it's just so obvious, right? Tesla is
Yeah.
like, making profits each. That's the thing with Tesla. It's like with each new car lineup that they release, their operating expenses are not increasing that much. They're just, it's pretty much stable. And so all of that margin just goes basically to operating profit, and it makes Tesla into this hugely profitable, company. A lot of people, I don't think, still they don't completely get that. But like, yeah, it's like, it was obvious a year ago. It's like, hey, Tesla's going to be very profitable, be eligible for S&P inclusion. But this kind of whole thing of the S&P 500 kind of backing off, not including, this is kind of throwing me off a little bit, because I was like,
Yeah.
hey, before it's like seemed pretty obvious. This is like a large cap company,
Yeah.
and
Yeah.
it's like they're gap profitable, like 5 quarters in a row now. And it's
Yeah.
like, hey, what's going on?
It's all the bears and misinformation that gets to that. All the people
Exactly.
like you and I talk to on the street, or neighbors or friends who don't know much about it. They just have bad impressions. They think it's overvalued, the next tulips mania thing or
Yeah.
whatever. And so the S&P committee, I guess, they're not super well informed.
Yeah, or they're getting informed from certain people or groups of people, right?
Yeah.
That tell them
Pressured.
like,
Yeah.
hey, there's
Yeah.
regulatory income that shouldn't be included, and blah blah
Yeah.
blah, all that stuff. Yeah,
Yeah. Absolutely.
yeah,
Yeah.
um, yeah,
So it's
um,
interesting.
yeah. Definitely interesting stuff. Yeah, this has been a great conversation. Just wanted to thank you for being open and sharing about all your past. I noticed like you're saying how since you're transitioning from, your old company now to starting a fund yourself, now you've decided just to become more open, I guess, with your,
Yeah.
finances, or your, your history. And I think that's extremely helpful in a lot of ways, like to actually see the numbers and to go through your thought process, etc. Like personally, actually, like I think people would benefit more if I was more transparent, actually, if I actually shared exactly what I bought, or how I bought, how much I bought, like
Yeah.
what I had, because it gives context to some of the things that I might be sharing about, or I might be struggling with. But like, for me, there's like I see that it could help people, but then also, I guess having that all out there, it also carries some downsides too, you know? Like
Yeah,
my
absolutely.
wife is a pretty private individual who values that privacy, you know? And
Yeah,
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 just to have kind of everyone know, like, you know, what our net asset worth is, et cetera, all that stuff. It just kind of is a bit more complicated and more exposure than we want. But I don't know. I guess in your case, have you wrestled through those issues, and
absolutely.
what have
Yeah,
you
I thought about it
come
a
up
lot.
with? Yeah.
You know, there was this publication called like Hedge Fund Alert. That's it did the first piece on me starting a hedge fund a week ago. They published it, and I thought about going into that piece like, am I going to put the numbers, the metrics of my, you know, how much money I'm going to start this fund, you know, all that stuff. You know, and I just decided like, you know, transparency is usually better in my opinion, in my way, in finance. You know, if I'm going to do a finance business, which is what I'm doing, like if you get to a certain size, like people know, like, you know, if you're a successful hedge fund manager, any of the successful hedge funds out there, like, you know, the person who founded it or runs it's like worth X amount of money, you know,
Hmm.
and, you know, I hope to get there one day, you know, but if not, it's okay. I'll manage my own money and hopefully not lose it all in Tesla, but I could go
Hmm.
back to work, worst case, you know. Um, so I wrestled with it, and I just realized, you know, this is a finance investing media. I'm not going to publish this stuff on Facebook or, you know, public forums that's not finance related. But for
Hmm.
finance related news or publications or whatever, I think it's probably okay. And people appreciate, I think, transparency on that stuff.
Yeah, yeah, definitely agree. Yeah, so where can people find you? You're on
Yeah,
Twitter. I'm actually following
Twitter.
you. What's your
Yeah,
handle?
it's just my full name, Emmet Peppers. Kind of unique, just EMMET. Last name is Peppers, Peppers. So Emmet Peppers. That's my Twitter handle. But more importantly, I have this firm I just founded called Good Soil Investment Management. And so goodsoilinvestment.com. If you go to that website and you want to learn more about this fund I'm setting up, I'm going to have a marketing deck in the next week or two ready. If you put your email address in, I'll add you to it. It's a 506c hedge fund, which is a little different. Most hedge funds are not a 506c hedge fund. So that means I can market it to the public, but I
Hmm.
can only accept accredited investors, obviously. But at least I can show my performance and talk to the public about it. So I hope to post
Hmm.
some good stuff on that website in the future. So goodsoilinvestment.com.
Okay, goodsoilinvestment.com. And yeah, basically only open to accredited investors.
Mm-hmm.
And then your fund, I'm guessing you're sharing with me privately that I guess your approach is, are you going to continue to take kind of your more higher risk kind of, you know, trading approach with this fund?
Yeah, I mean that's another reason it's you know, credit investors, because it is pretty high risk, right? I mean, it's so far this year it's like 50x return plus, you know, and there's a lot of risk in that, right? So I want to make clear to investors that, you know, the investment could go to zero, you know, but you could also get 50x return. I mean, I'm never going to have this type of year again. I want to make sure people know that, like,
Well,
this is
actually,
the
you
best
shouldn't say
return.
never because, yeah, I mean, you
It's
know,
possible.
the probabilities are, you know, you might not have, especially maybe in the
Yeah, yeah,
like
yeah.
near future, but who knows down the road? Who
Who
knows what
knows?
will
It's
happen?
possible.
Yeah,
Don't expect
exactly.
it. Yeah, people
Yeah,
shouldn't
yeah,
expect
yeah.
it. I have a similar investing strategy I think you've talked about, is that I look for investment opportunities that I think could return 10x or more. And if I think there's a 20% chance or more of that happening, I'll make that bet. And a lot of
Hmm.
times, if it doesn't happen, it turns to zero. But that's okay. As if I get 20% of them right, I have a good return, right? So I'm trying to make that investment opportunity set more than just Tesla, although that's my highest conviction name. And I use options and exchange traded derivatives to find those investment opportunities. You know, whether it's index puts for for the Nasdaq,
Hmm.
NKLA puts, which I failed on the timing with. You know, Square option calls, which have worked out well, I think. So that's the investment strategy, is trying to get 10x or
Hmm.
more returns on each investment decision.
Got it. Yeah, and then you're putting your own money into it, right? Have you
That's
decided
right.
like a range about yet or?
Yeah. Yeah, I mean, I think right now it's, I put in the 100,000 worth. The fund itself is like 5.7 million or something like that,
Hmm.
and so that's already a nice amount. But I think I'm going to put an extra for my personal account, an extra maybe 10 to 15 or something in there. I can transfer stock, with the cost basis in tax, so I don't have to pay taxes, which is
Hmm.
nice. It would be hard to do if I had taxes and then put money in, but
Yeah,
because I can just transfer shares in and then pay taxes down the road when I sell the stocks or securities.
got it.
So yeah, I'm probably putting more of my personal account into it
Yeah.
as well. And it might not be quite as aggressive as it's been to date, but it's going to be aggressive. Yeah.
Yeah, yeah. Like one thing I do like appreciate about your approach is like you're putting your own money into it, you know? Like
Hmm.
some other
Yeah.
people might be like, hey, I made all these gains and now I'm just gonna put them aside and start a fund with, other people's money and make money off
Yeah.
of management and not have, I guess, skin in the game. But I think, your approach, putting skin in the game, especially, let's say a high risk, approach, at least like, if things don't go well, you take the biggest loss, in a sense.
Hmm.
Um,
Absolutely.
yeah, yeah.
Yeah.
So, yeah,
Yeah.
definitely.
Yeah, I mean, my previous job was selling to hedge funds, startup hedge funds, a lot of times, and so yeah, I saw a lot of that where hedge fund managers are have a seed investor seeding them with X million and it's a little bit of their money, and some hedge funds start with their own money, and yeah, so I saw a variety of strategies, and most hedge funds fail and shut down within a couple of years. And so I know that's a realistic possibility here, but I want to give it my best shot.
Hmm. All right. What's your do you have a long-term vision, like 5 or 10 years? What do you want to be doing? What do you want let's say your fund to be doing? Or yeah, what do you envision?
Yeah, it's a great question. Yeah, so that's what's inspired me to move forward with the hedge fund is this vision I have of it being more than just making money for myself. Most hedge funds have this fee structure of 2% annual management fee, 2% of the assets is a fee, and then 20% of the performance. So that's the standard. They call it a 2 and 20 fee structure for hedge funds. So what I'm trying to do is I'm still going to charge that structure to the investors, that fee structure, but I'm putting in the prospectus of the hedge fund that half of the fees go to charity through a foundation I'm setting up, right? So, and I want to be also transparent about the foundation. Like if this takes off, I'm going to treat the foundation and the donations to charity very seriously, almost as serious or more serious than my investing decisions. Um, and so if in 5 or 10 years, I would love if this fund was so successful that it starts a trend and inspires a whole new breed of investment managers to do something similar. Sort of like ESG investing has become a real trend, maybe there could be like a charitable giving aspect
Hmm.
with investment managers now that investors look for, and it'll be a trend. And capitalism has gotten not such a great name with young people lately, and the most capitalistic thing you could think of is hedge funds in a way, right? So maybe this could reverse some of that perspective a little bit.
Hmm. All right, sounds good. Wish you the best, man. Thanks for
Thanks.
taking the time out to chat, and yeah, we'll talk to you later, man.
All right. Thanks, Dave. Appreciate
Okay.
this a lot, and we'll stay in touch. Yeah.
All right.
Sounds
See you,
good.
Emmett. All right. Bye.
All right. Bye.
All right, I hope that chat was helpful. It's been a blast personally to chat with people like Emmett and others and to share these conversations with you as well. If this video has been helpful, I encourage you to like it and to consider subscribing to my channel. I've got some really interesting and fascinating interviews ahead as well. In this channel, we're looking at investment topics and the world from different angles, trying to use independent thinking to get beneath the surface of things. I'm on Twitter at HeyDave7, and we'll see you in my next video. Thanks.